Well, we've got some news for Tesla. Not only do we need to talk Investor Day, lithium, shocker, but we got to talk about rumors around that small car. But first, let's see what Morgan Stanley has to say with their Tesla Investor Day preview. Here's how EVs will be made. ... Yes, that's literally the headline of the Investor Day presentation preview here from Morgan Stanley. And I have to say, the ... is actually a really brilliant placement of a ... Now, you might be thinking, Kevin, what do you mean? Like, it's just an ellipse. It's not that big of a deal. Why would the ... matter? Well, the ... actually matters a lot. I'll show you why in just a moment. First, remember what Brett Whitten said with extreme confidence that Tesla was probably going to announce a new vehicle on Investor Day? That kind of shook me to the core a little bit. Brett Whitten's obviously from ARK Invest, and I'm like, really? I thought the next Master Plan 3, the MP3, who remembers playing MP3s on like a Walkman back in the day? Anyway, Master Plan 3, MP3, I thought it was going to all be all about scale, right? Copy and pasting gigafactories, which it may be, but I didn't think they were actually going to announce a new car. Brett Whitten from ARK Invest thinks they are going to. But now I'm talking about this ... and why am I doing that? Is it because I have a flash sale going on built around Master Plan 3's reveal for March 1st when the flash sale's already begun, but it'll expire on March 1st? Well, maybe. Or it has to do with this ... right here. Look at what Elon Musk says. Elon Musk says, Kevin's courses are amazing and you should join the private... Oh, so I'm reading a different screen. Okay, EV1 to T0 to Tesla Roadster, the original, the OG Tesla Roadster, to Model S, 3, X, and Y, to semi-truck, to Cybertruck, space, ... Elon Musk himself teasing the ... which is in reply to Tesla talking about being the largest manufacturing employer and starting as a long shot startup founded 20 years ago in San Carlos. And so this tease right here is really teasing something missing, something to come. And it's also fascinating because that's what Brett at ARK Invest suggests. And it's also what at least this title is toying with from Morgan Stanley. So what does Morgan Stanley say? Well, first of all, they have an overweight rating for the stock, so they're bullish. They have a price target of $220 for the stock. And let's just read what they say. With Tesla's Investor Day just 1 week away from now, investors are focused on what can change the narrative to continue the stock's recent rally. We look for Tesla to unveil a suite of technologies required for the mass adoption of EVs at far lower price points, a critical component of Master Plan 3. Now, this is where one of the things that we've talked about was this idea that if Tesla can reduce their margins by 50% or reduce their cost of goods sold by 50% on a vehicle, they could reduce the cost of their vehicle, their headline price of a vehicle, by potentially 35 to 40%, which is phenomenal. Now, some people challenged me on the math on that because they in my opinion, they were doing it wrong. They're trying to take like to go like, well, 50% cost less. Anyway, let's just do the math together really quickly, and then you could see if this seems logical to you. So a Model 3 right now sells for, if we pick a brand new Model 3 right now, the least expensive Tesla vehicle, sells for, here it is on screen, $42,990. But you don't want to, I didn't get to really show that. You don't want to take 50% of a cost reduction off of this number because that's actually not the number. You've got to pull the margins, right? So if the cost of the vehicle is $42,990, and now what we're going to do is we're going to minus the margin. Let's go ahead and take off 20% as margin today, as things are still potentially relatively expensive today. So if we take off 20% right now, the COGS, costs of goods sold for this vehicle, are 34392. If we can take 50% off of that, then what we're really doing is taking off minus 17,196, right? So now we're saying 34392 minus 17,196, which should just be half, right? What we're doing with that is we're saying the car now costs 17,196. So that means the new COGS equals 17,196. Well, if Tesla is trying to achieve a 25% margin, then that actually represents 75%. So we can just divide that number by 75%. And if we divide that number by 75%, we get to a new vehicle price of $22,928. Look at that. There's your $25,000 vehicle if they can reduce their cost of goods sold by 50%. And they want a 25% cost or profit margin. If we change this to 70%, which would be a 30% profit margin, that is the long run goal, right? 30% profit margin. Well, now all of a sudden the new vehicle price would actually be, watch this, it's eerie, $24,564. There's your $25,000 vehicle. So if they can reveal how to get their costs down 50%, the $25,000 vehicle is basically in the bag. Hey, quick note, Ricky Caruth on YouTube made a phenomenal review of his shadowing experience with me. So if you're interested in that, learning more about me or my personality, what I'm like in real life, or those programs on building your wealth, linked down below. Use that flash sale. We've got a 69% off discount for you on all the programs on building your wealth. The most common right now are 0 to millionaire real estate investing and stocks and psychology of money, which come with trading, fundamental analysis, long-term analysis, my thesis on the market, Q&A with me and daily market open live streams, and in the Elite Hustlers course, we've got custom live streams on the weekend. Wild. So as we wrote about in It's 1913 All Over Again, Tesla's recent price cuts are close to unprecedented in automotive history since the early days of mass vehicle production when Ford launched the Model T. Henry Ford introduced the moving assembly line in Highland Park, Michigan in 1913, revolutionizing auto manufacturing. Subsequent deflation transformed the competitive landscape and drove out much of the industry's players at the time. Now that's really interesting because if you think about it, who are some of the competitors that are not profitable on EV? Ford is not profitable on 2020 on EVs. Probably won't be until 26. GM probably not profitable on EVs. They're not showing us the numbers. Toyota is not even trying right now, although they will in the future. BYD is barely profitable on EV, and they're probably only profitable because they're doing hybrids. Lucid and Rivian are basically a joke in reference to profitability. I mean, they're spending money hand over fist just to get people to buy their cars. And Lordstown Motors, I mean, we don't even need to talk about them. They've produced like 32 cars and they just paused production because they can't figure it out. I think Ford's actually still under pause because of their production issues as well. But anyway, look at this comparison they're making of the Model T production line compared to gigapresses over here. It's quite impressive. We think the investment community may be underestimating the obsolescence curves underlying much of today's EV and battery technology in production. It is very possible that Tesla's March 1st Investor Day may have greater significance on the market's perception and ultimately valuation for Tesla's EV competitors than for Tesla itself. In other words, maybe Tesla stock doesn't move much, but maybe, just maybe, what happens? The other companies start trending more towards bankruptcy because they realize they're not even close to what Tesla's doing. And that just makes it easier for Tesla to compete. For Tesla to become a massive mass market manufacturer, introducing lower price points is necessary to have a meaningful impact on the carbon footprint. However, for this to be possible, Tesla will need to successfully lower the average price of their offerings, ideally also cut costs to leading to sustained margins basically, but this is their suggestion. With a stated target of a competitive offering at $25,000, Tesla will have to make significant progress on their costs of good per vehicle. A redesigned interior of the Model 3, Project Highland, and the subsequent learnings could be a step in the right direction. Yeah, I mean, this aligns with the math that we were just pointing out, right? Totally aligns. And this is where I have long-term had the belief that Tesla is actually going to be relatively recession-proof. Now, I know that sounds like a joke because obviously Tesla has done horribly over the last year, but I think a lot of that is driven not by Tesla's performance or their valuation. Sure, in part, maybe there's some there, given that growth has moved from about 50% to like 38%, right? I think most of Tesla's poor performance was actually due to Elon Musk selling. And some people laugh at me when I say that, but then I don't think they know the data. That, remember, Elon Musk sold about $24 billion of Tesla stock last year. how much in billions did retail hodl, like buy and hodl last year? 15 billion. That means if retail just hodled and bought, and that's net, right? 50% more. So like if you bought $10,000 of Tesla last year and you and everyone else bought another 5,000, so 50% more, you would have just broken even what Elon sold, okay? He milked, like, pardon my French here, cover the children's ears. He milked the shit out of us. Okay, but anyway, Tesla's Model 2. Okay, so this is potentially the idea that maybe the Model 2 will be what leads to these margins, or will it just be a refined Model 3? Who knows? What does Morgan Stanley say? Reuters reported in November that the aim of Project Highland is to significantly ramp the Model 3 components and interior. Remember, the numbers that I just showed you were based off the Model 3. You could actually turn the Model 3 into the Model 2 pricing of a $25,000 vehicle. Like, you don't actually have to announce a new, cheaper car. Even though there's some speculation of that, I've been convinced by what Brett Whitten over at ARK Invest says. And the convincing he gives is that, you know what? You do not need a cheap vehicle in the American market because people won't buy it. People want a car for that odd time they're going to go a long distance. They don't want a smaller car. Now, there is this suggestion that what about that design of a smaller car that Tesla teased when they announced their Shanghai expansions? We'll take a look at, let's see here. Hold on, I want to share the screen, but I broke something. Tesla basically teased this smaller form factor Tesla in sort of a mock-up design. There it is. It's on screen right now. Tesla has previously teased this smaller car, but maybe Tesla doesn't actually need that. Maybe they just need to make the Model 3 so much less expensive to build, they've got the $25,000 car in the bag. Alternatively, there's also this idea that a smaller like Model 2 gets announced in China only. So for like the Chinese and Indian market where smaller vehicles are actually normal, they're not super normal out here. So that's possible. Continuing more with Morgan Stanley here, images of the Model 3 with a covered front and rear end have sparked further debate about whether the exterior would also see changes, why it matters. Well, obviously because of margin. And then they say here, ultimately, we believe if Tesla is to successfully fulfill the goal of having a $25,000 model, there will need to be further improvements related to the gigapress and battery manufacturing. Now look, battery manufacturing is great. I mean, the 4680s are phenomenal, right? We saw that on Battery Day. I do have my speculation though about how great the 4680s really are. Now I know that sounds kind of blasphemous as potentially like a Tesla bull, but we could jump one over here and just sort of draw this out. But I want to ask you this for a moment, and this is just me being super jaded, okay, super jaded, but watch this jade, okay, and I think it's mind-blowing jade, okay? I'm going to draw a very bad drawing of a battery, and let's call this, have you ever heard of a C-cell battery? Of course you have. They're the big fat round ones, right? And then, have you ever heard of a D-cell battery, which is bigger, like you put it in your Nerf guns and stuff, right? Okay, like I don't know exactly what the numbers are, but the D-cell is obviously 25% larger, you use like 25% fewer cells, it's got more energy, right? The 4680, in my opinion, might be cheaper to manufacture and create like cost benefits of maybe 15 to 25%. But is it possible that some of the excitement around the 4680, and again, I'm tinfoil hat, I'm not an engineer here, and I know they're going tabless design, maybe it'll be cheaper to manufacture, okay, we can get rid of cobalt and stuff, fine. But is it possible that a lot of the excitement around the 4680 is just because it's a larger cell, right? I mean, think about it. When they pitch on Battery Day, hey, look, it's got more energy or whatever. Well, yeah, it's a larger cell than the prior battery. So, like, for example, let me show you this screenshot over here. If I show you this screenshot from Investor Day, and then I hide myself, they're showing a larger cell that has 5 times the energy, 16% more range, 6% or 6 times more power. I'm like, yeah, it's a bigger cell. Like, I'm sorry, a little tinfoily hat there. Don't get me wrong. I do think there will be some cost improvements, but I think the better battery is really just about better margin for Tesla, which obviously as a Tesla investor, I'm a fan of. But I don't get as excited about the 4680 as other people do. Sorry, I just tinfoil hat in here a little bit. Anyway. So I mean, like, eventually, I was talking to people about this yesterday. As we were looking at real estate, and one person's like, maybe they'll just have one battery cell in the future, and then we're all joking like, this battery's 1,000x more powerful than the 4680, because they use about 1,000 4680 cells per car, and it's like, well, if it's all one cell, it's 1,000x more powerful. It's like, you didn't really engineer anything other than a larger battery cell, right? Again, I'm not trying to tinfoil hat. I just think some of what we saw on Battery Day was kind of clickbait. I hate to say it. But anyway, so announcing the introduction for the Gigapress of the Model Y at Battery Day in 2020. Okay, now we got 5 Gigapresses. Obviously, there'll be the Gigapress for the Cybertruck. Okay, these are things that could help us. Reducing components, right? Going from 80 pieces to 1 of the rear floor, going from 90 to 100 pieces to 1. Other structural components, whatever. Like all of these unibody castings, big deal. And so, look at, holy smokes. Wait, what is this? Our forecast has the global Tesla car park. Okay, yeah. So basically, Morgan Stanley actually thinks that Tesla's going to get to 33 million vehicles on the road by 2030, and they think that Tesla's going to deliver 7.2 million vehicles by 2030. Okay, yeah, I think ARK Invest is at like 20 million vehicles, and I'm at 4 million for 2025. Interesting. Okay. They think we expect 2.6 of that, so about a third of that, to be the Model 3 or a future compact vehicle. I think any future compact vehicle will end up just being in China. Okay, fine. Front-end Gigapress is now available. 4680s running off the line. Fine. Lets you change sort of the structural battery pack. That's another benefit, right? Obviously, structural battery pack helps. Gigapress has multiple advantages. Okay, I mean, this gets a little, like, now they're just trying to get a little bit, detailed here, showing you how they're going from, look, lots of parts to one part. Ooh, lots of parts to one part. I mean, we've all seen this kind of stuff before. This is quite interesting, though. They've got, this whole presentation sort of reiterating the structural information that we learned on Battery Day. Like, hey, look, planes put their fuel in the wing, so why not put our batteries as part of the structural elements of the car? So that way we have maybe a stronger car that is more simply designed to increase margins. So in other words, what they're really suggesting, Morgan Stanley here is saying, hey, we're just going to give you an update on all of these advancements that we've made in manufacturing to get margins up. That's Morgan Stanley's take here. But I did promise Steve that I would talk a little bit about commodities, so let's just touch on commodities a little bit for the lulz. So, sorry, Steve, but lithium prices are plummeting. Lithium prices, even though production has remained stable, apparently in China, you've got a substantial decline in EV demand, which is potentially a red flag for Tesla, unless Tesla is the one holding up demand and other EV demand is slowing, although that's unlikely. That's kind of like the Goldilocks hope. Apparently, the China reopening has not really supported much of a floor in lithium prices, and lithium prices are down 30% in China and recently here, and demand is down 52% for lithium in China, and lithium prices in America are down about 10%. Now, that's quite interesting and maybe actually really good for Tesla margins as well. And who knows, maybe we'll hear about that as well on Investor Day. But what do we have over here? Goldman Sachs talks about this being the first leg, potentially of many, lower for EV pricing pressures on lithium. Lithium now dropping to a 12-month low, broadly unchanged production, leading to a rise in inventories, and a bigger correction here than expected for lithium pricing. Obviously, some other commodities are still moving, but apparently here's some charts. Weak battery supply chain activity has halved lithium demand in China. CATL's actually been reducing their prices, trying to become more competitive. CATL is a Chinese battery manufacturer. Tesla actually buys a lot of batteries from CATL, and they're actually reducing their pricing. Very interesting. Why would Tesla consider buying a lithium miner if prices are going to come down and stay down? Damn. Checkmate. Steve's back at it again. Damn it. That's it. Cancel the deal. Don't buy the mine anymore. That wasn't nice, Steve. I was supposed to be right. Yeah, that's a good point. But anyway, look, I mean, commodities are very volatile. But obviously, if commodity price pressures can come down and Tesla can buy cheaper batteries from CATL, lithium prices come down, that's phenomenal, right? That ultimately helps because on the way up, they've been hurting margins more than I expected. I didn't think lithium would, I know that's a big deal, but I didn't think it would hurt as much as it has for Tesla, but it has been. So now we got Mohamed Alarian saying the market's starting to doubt whether the Fed will ever get to 2%. I'm so exhausted at all this talk about the January reports over and over again, but we'll see what happens as the day evolves and then obviously in the next season here. But anyway, that's my thought on, okay, so there's a question about whether this drop in lithium is seasonal. This weakness is greater, and this correction is greater than what would be expected for a seasonal adjustment. That's talked about as well in the Goldman piece, and they talk about basically... They go into so much more detail. Honestly, I don't really want to go into it. But yes, that is talked about. And they suggest that this is worse than typical. Uncle Jesse has a message for you, Steve. Uncle Jesse says, go fondle your rocks, Steve.